good evening to all of you. Most respected faculty of today's session, our dear Soman sir, Vice Chairman of Kannur branch CA Pijariji, Treasurer Dinesh sir, immediate past Chairman and Member Executive Committee, Management Committee CA Saju, illustrious past Chairman, past Chairman of Kannur branch, members of the profession, and my dear participants. Yet another happy moment for the Kannur branch with the presence of one of the leading indirect tax professionals in Kerala, our own CA Soman sir from Cochin. And we are extremely happy that today we are going to have our discussion on the topic, the issues in input tax credit under GST. And Soman sir is a person who is doing the seminar on GST for the past many years, including service tax and everything, and a specialist in indirect taxation. And he is a passionate teacher. All of you knows that. I think last week he has got a seminar at Alapi, and yesterday I have seen him in another seminar at Alapi on GST, or wherever GST seminar and the GST participation is there, Soman sir will be there. Sir, I am taking this opportunity to welcome to Kannur branch once again to a seminar on this fine evening on the topic GST. And I am thanking you for accepting our invitation in this regard, sir. Welcome, welcome, sir.
Thank you.
And I am taking this opportunity to welcome all the participants, members of the profession, and all including students, if any. And thanking all of you for the support extended to Kannur branch. And regarding the next few seminars, I think on Saturday, that is August 15, I thought that it is better to have a break, because every Wednesday and Saturday we are doing the seminar. So on August 15th, we are taking a break. And the next, I think that is on 19th, we will have a seminar by Sai Prasad from Bangalore regarding again GST. And on 22nd, we will have another direct tax seminar by Kapil Goyal from New Delhi. He has also agreed. So these are the two seminars that we are planning for the next week. And remembering all of you to fill the Google form, which is one of the requirement to have the CP credit for the Kannur branch members. I request all of you to enjoy and use this opportunity with our Soman sir, and requesting the past chairman, the vice chairman of Kannur branch, CA Pijariji, to formally introduce the faculty of this session. Riji, over to you.
Respected Chairman CA Jayaprakash, renowned speaker for today's webinar CA NL Soman sir, Secretary CA Shivaprasad sir, illustrious past Chairman of Kannur branch, my managing committee members, fellow members in the profession, students and dear friends, a very good evening to all of you. It's my pleasure and great honor to introduce you an eminent speaker and a person very dear and near to the members of the Kannur branch, CA NL Soman sir. He is a chartered accountant in practice with the area of specialization in indirect taxes and GST. He worked with the public sector undertakings, Mrs. Cochin Refinery and Mrs. Bharat Petroleum Corporation Limited. He has more than 25 years of experience in handling indirect tax matters such as central excise, customs, import and export, service tax, issues relating to SEZ, foreign trade policy, and now GST. He was a convener of the study group for Goods and Service Tax in the state of Kerala, nominated by the Institute of Chartered Accountants of India, New Delhi, for the period 2016 to 2019. He is a faculty and trainer on GST for various stakeholders of ICAI. He is a speaker in study circle meetings of professional bodies and associations. He was a faculty for the training program for Central Excise Officers and the Indian Air Force conducted by ICAI, New Delhi. He is a faculty for indirect taxes for the CA intermediate and final courses at ICAI branches and other coaching institutes. He conducted more than 250 seminars on GST for the trade and industry, tax professionals, colleges and other students in and out in the state of Kerala. Dear members, this is the brief profile of CA Soman sir. Soman sir, we are extremely happy and delighted to have you here for today's virtual CPA seminar. Thank you, sir. Over to the chairman.
Yes, thank you, Raji. And before starting the seminar, I'm taking this opportunity to apologize on the delay due to the technical issue on the Zoom platform. Anyway, over to the faculty. Soman sir, over to you, sir.
Okay.
Thank you.
Thank you, sir. Thank you. Thank you very much. Once again, good evening to one and all. I'm really privileged to be one among you in this evening seminar. This is the second time I am getting this opportunity to interact with the learner members of the Kannur branch. I hope some 1 or 2 years back I was there for a brief half-day program, and this is the second time I am getting this opportunity. But one thing I just wanted to tell you, when I was talking to the chairman of your branch, I was just inquiring what is the program like and who all are the faculties over a period of time who have actually interacted with the learner members of the Kannur branch. According to him, almost all the faculties are from outside Kerala, and all the veterans and the stalwarts are coming over to Kannur branch in this medium and for taking the classes. I just take this opportunity as a privilege for me. I was just telling him that in the midst of those stalwarts, how come my name picked up there? Anyway, I take it as an opportunity and a privilege, and I'm really honored to be one among you for this brief discussion on the subject selected for today as a topic. I hope all at Kannur are now okay, because we have this difficult situation. We have been going through this difficult situation, and the news here are that Kannur outskirts are also a little bit affected. Last year also I came to Kannur for some other programs, and I have some friends there also, including the members of ICAI branch. So today the climate has something changed, and we hope for the best. With a very since we are having this very limited time to talk about a subject of interest for all of us, I am straight away going to the subject. My only request is that let us take these 2 hours as an interactive session, because all of you have so long been discussing, and we are learning, we are hearing a lot of people about this subject, and we have been practicing this also in the day-to-day activities, and a lot of articles and other things, lectures we are seeing and we are watching. Still, we have some difficulty, and we face some situations where we find it difficult to move forward. So what is the reason for that, or how can we overcome this situation in this topic? Input tax credit. We all know it is just like a hard cash. So if we are not utilizing it properly, the difficulty we have to face are from 2 sides. One is the owner will be losing the money. The owner of the business or the business is losing the money. Or the other side, if you are not properly managing the input tax provisions, then the other side, department will come upon us. So this is a crucial subject. Let us see what is the impact, or what are things we have to do, or we have to learn, or we have to just look into when we practice this particular subject. Wherever we go, we are getting an information that input tax credit is a very difficult area. There are issues always. But one thing I just highlight that the people in Kerala, this part of the state, the country, and the business people altogether, we may not be able to take up any issue up to the Supreme Court level, because it is not a practice for us. Rather, we are almost medium level businesses. So there is no question, or there is no meaning in taking over or confronting with the department with a form of adjudication and the case proceedings. As far as possible, let us now avoid this sort of a litigation. We all know litigation will take us, we may not be able to concentrate on the business, and it will be taking us to long years for getting a settlement on the issue. So let us understand what is the situation, or what exactly the issues like, so as there will not be any long standing legal proceedings. We are all here to educate the business people, practice the good compliance, good principles of this law, and we are here for a better profession. My only request is that we have to approach these input tax credit provisions on a positive way, without knowing the provisions. And we are also overhearing the same complaint that a lot of issues are there. I admit that issues are there. But are we conversant with the provisions of the input tax credit, or the provisions of the law, or the compliance procedures as far as this particular subject is concerned? We have been getting very little credit in the earlier tax regime. We are very much aware of that. But when compared to the earlier regime, tax regime, and the present GST scenario, earlier we have been told that, because at the beginning of the GST year, we have been told that we are getting a seamless credit. Seamless credit in the sense there is no block at all. Whatever you pay for sourcing the inputs or inward supplies, we will be given that credit back when we are making an outward supply. That was the understanding, that was the offer, that was the promise given by the authorities. But of late, we have seen that so many things are hindering us in availing the full flush, that is the full freedom, full fruit of the input tax provisions. Our discussion is mainly on as and we move forward, let us have a look at the issues as regards each of the provisions are concerned. Our concentration is on understanding the provisions also simultaneously, and then analyzing the issues concerned. The more we look into the provisions, or rather as far as possible, when we are reviewing the provisions again and again, always we get a new area of interest, or we get a new information, a new meaning to that. Sometimes it may be detrimental, or sometimes we may be able to take more advantage out of that information. So the entire picture of ITC is aggregated into understanding the relevant definitions. Number of definitions are very particular for this area, apart from the general definitions appearing in the section. So one thing, when we read the general definitions, we may have noticed that in the definitions per se starts with wherever otherwise this particular context warrants, wherever in other parts of the section act, wherever a particular context warrants a different meaning, then the definition given in section 2 need not be followed. So that is the pretext given in section 2. So section 2 definitions cannot be taken to all area wherever a particular aspect, a particular definition is specifically earmarked for that section. So similarly, ITC also may have some sort of such situations. Anyway, we need to look into the relevant definitions. Eligibility and the conditions for availing the input tax credit, section 16 and the following sections. Apportionment of credit and blocked credit, very important area, critical area, section 17. Availability of input tax credit in specific circumstances, section 18. And how ITC is utilized, section 49 and 49A, B, etc. We now see only few sections, very few sections, 16 to 18. Then 19, 20, 21, of course, a separate category for job worker and input service distributor. With these few sections, are we facing a lot of difficulties? And in that sections also, we have only very minimum sections. So the statutory sections relevant for this input tax credit are 16 to 18, then 19, 20, 21 ISD, 19 job worker, 2021 input service distributor. Very few application may be there for most of the businesses. 41, section 41. The input tax credit availment itself is based on section 41. Claim of ITC is a provisional thing only by virtue of, or we are able to avail the input tax credit only by virtue of, because of section 41, because it gives us the provisional clearance for availing the input tax credit. As we move on, we will see what is the time when we are eligible to take the input tax credit or when we are availing the input tax credit. Almost all these provisions may be aware to all of you, but just for seeking a discussion mode, I'm just putting up these sections once again. And section 155, last section on that choice. Burden of proof in claim of ITC. Whatever is the ITC we have claimed, it is we ourselves have to prove to the department or to the authorities that we have taken the input tax credit correctly by complying with the provisions of law. It is our requirement. It is our responsibility to prove to the authorities, because specifically section 125 earmarks for that. Coming to the rules, 36, rule number 36 to 44 are the related rules. The applicability, the method of giving the meaning and assigning the various opportunities in input tax credit are manned through, prescribed through these provisions, that is the rules. Sorry, I have mentioned there are sections, but it is actually rules only. Just correct it. It is not section, it is rules only. I just copied that slide, then put up changed the numbers only. Kindly correct it. So these are rules 36, rule 36, 37 to and up to 44. How we are dealing with those, manner in which certain aspects, if are to be done as per the section, how we are proceeding with that are prescribed in the rules, specified rules. One prominent question asked by a lot of people are, is ITC a vested and absolute right over and above the statute? Is it an absolute right of the person? Have we got any constitutional provisions enabling us to treat it as our right, citizen right? Let us see some of the verdicts of Supreme Court in various previous cases. When I say Supreme Court means the apex court, we need not go beyond that. So apex court in many circumstances in the earlier law, as well as in current provisions, current GST law also, have held that, Supreme Court has held that the SENVAT credit or the input tax credit is not a right of the person. And the department has got enough power, authority to prescribe the manner, prescribe the restricting provisions for the availment of input tax credit. One such case is there. Second is, if the input tax credit is in the nature of a benefit or concession extended to the dealer, that court also agreed. But the concession can be received by the beneficiary only as per the scheme of the statute. If there is a statute, everybody has to comply with the provisions of the statute in order to avail that benefit offered by the provisions. It is not a fundamental right just like that. In all, I have taken off 2-3 verdicts of the apex court. In all these cases, input tax credit, they all admit that it is a benefit offered to the people or the taxpayer. But he has to comply with, he has to follow the prescribed method, the manner, provisions of the statute for enabling him to avail that benefit. That is the decision of the Supreme Court. So we also have to comply with the provisions. We have to abide by the provisions of the verdicts. Taking clue from that, what all are the special terms which come under this particular chapter, input tax credit? We are taking all these technical terms in one mode, in one way or other. We are using this synonymously, equally. There are the words like eligible, entitled to, allow, available, claim, availed, and then issues. All these terminologies are clearly mentioned or differently worded. All the provisions are containing these words here and there, but we sometimes presume that these are very simple items. We need not bother about that. Just for the sake of convenience, they are using all these synonyms here and there. It's not like that. These words have to be understood very clearly. Eligibility means, take an example. Eligibility for casting an vote, our fundamental right. Vote, the right for vote. Any person eligible for casting vote is upon he attaining 18 years. Less than 18 years, not eligible. So that is eligible. Once he is eligible, after attaining the age of 18 years, he has to comply with he has to go through, he has to convince that he is also having an voter's ID. That is another proof. Entitled means he is entitled to vote only when he is having an voter's ID. Even if having an voter's ID, this person is not allowed to enter into that venue and cast his vote. He has to comply with, abide by the provisions as prescribed there. So allowance is also based upon complying with the certain provisions. Then once those provisions are available, that facility will be given to them when he is abiding by, he is following those provisions, complying with those provisions. He will be given that facility, some facilities for availing this benefit. These facilities will be there for his casting the vote. So those facilities are there to vote. We know what all are the facilities available there. Take that facility, avail that facility, and cast our vote. Then only the available but fulfill the conditions also. So if anybody says that I will not allow the person to put that ink upon my finger, no, there is no claim for vote. So we cannot have a claim unless we fulfill these conditions. So claim is another crucial item. So we are going to attain that. So that is our claim. Then only we are claiming. We are passing through eligibility, entitlement, allowance, availability, and then claiming something. We follow all these previous scenario steps. Then only we are eligible to claim that benefit. And that too is not over. After claiming, finally, we have availed that. So once we have claimed it, then only we are going to avail that. We are utilizing that. Then arises certain issues before this availment or after this availment. So this is how we are now going to approach this particular subject. For that, we need to just look into certain definitions. Just quickly we go through those definitions. And we all know, starts with input tax credit. Symbol means credit of input tax. Giving back the input tax by the government. Refunding the tax which we have already paid upon sourcing the material or service. Inward supply, we call it as inward supply. That whatever tax we have paid will be given back in the form of input tax credit. So that is input tax credit. Then what all are these credits like? What is these credits? We know that it is credit of input tax. What is input tax? Input tax, first of all, the taxes which we have paid in respect of all the law acts of this GST. Act when I say CGST, SGST, IGST, UTGST. So these are the acts, and whatever tax we have paid as practice or as an obligatory provision when we source some material or services. These taxes are the first type of input tax for us. First type of input tax. Second is the integrated tax we paid upon import of goods. Integrated tax means just because it is called as integrated tax, since the import of goods and the export of goods are considered as interstate movements as per section 8 of the IGST Act. So section 7 and section 8 of the IGST Act are there to define intra-state and interstate. So interstate supply, we pay IGST also. That is, import of goods, customs duty along with IGST is the tax we pay as customs duty, and the IGST element is eligible for credit. Tax payable upon the provisions of section 9.3 and 9.4. Section 9 is the charging section of CGST and SGST Acts. 9 is the levying section, charging section. 9.3 is the section which defines a situation, gives a situation that instead of the outward supplier pay the tax, the recipient of the supplier shall make the payment of tax to the government as if he is a person liable for paying the tax. 9.3 reverse charge mechanism. It is applicable for both goods as well as for services. Goods as well as services. Clearly mentioned as defined, notified. Notified services, notified goods attracts reverse charge mechanism tax if the recipient is coming under the defined category. Reverse charge. Another kind of reverse charge was there earlier, that is under 9.4, that is purchased from unregistered person. Now this has been modified and a different scenario has been laid down in 9.4. It is just like a reverse charge mechanism. Here also definition must be there. Definition of what is the kind of service or what is the kind of goods, who is the supplier, who is the recipient. Only a few definitions or notifications have come in that category, especially for that cement purchase in the real estate project. Apart from that, no other notifications, 1 or 2 notifications only have come there. So whatever tax we paid as a reverse charge mechanism availer, that tax is an eligible input for us, can avail input tax credit. Then in IGST Act, the charging section is section 5. Similarly, there are also reverse charge mechanism coming under 3 and 4. Whatever tax we pay as IGST will be eligible for input tax credit. So reverse charge mechanism items are eligible. Third, other category is SGST. Similarly, we have same number 9.3 and 9.4 of SGST Act. Quickly we go to the UTGST. There the charging section is section 7. So similarly, there are also reverse charge items 3 and 4 are there. These are the items we call input tax for the purpose of availing credit. So these are the inputs we usually avail as credit. We call it as input tax credit, but it does not include tax paid under composition levy. Composition levy means it is a small scale dealer. He is not paying the tax at its scheduled rate. Only a small percentage of the turnover will be paid. Now it is 1%, half percentage plus half percentage for manufacturers and traders, and 2.5% for the restaurant, only one service. And similar provisions are there. We are not looking into that. So composition taxpayer neither allowed to take input tax credit nor he can collect tax from the customer. Then next one is what is the input. Then comes capital goods. Input tax we pay on both goods as well as on capital goods. We pay on goods. We can say pay on goods. Goods include normal goods, inputs as well as capital goods. So these are two categories of goods. Capital goods means the value of goods which are very simple definition. Value of goods which are capitalized in the books of accounts of the person claiming ITC. Requirement is that condition is that these goods should be used or intended to be used in the course of furtherance of business. Only an intention is sufficient for availing the input tax credit. As we move on, we will be able to see what is the impact of this intention to use. Capital goods, even if we are not put to use, as was there in the case of Senvat credit rules, even if it is not put to use, we will be able to avail the input tax credit. If our intention is to use it, no matter, it is kept with us as an asset. Input means the goods which are those goods other than the capital goods. There also the intention is very critical. Intention should be to be used in the business. We should hold it with us. Then either it can be used or our intended to be used items, goods are called inputs. There is no one-to-one correlation required that this item should be sold out. The moment we purchase the material and the conditions are satisfied, we can avail the input tax credit. Then manufacturing, okay, it is not one-to-one related. We are not going further into those items. We all know. Input service, similarly, means the service which we have, for which we have paid the tax, and the service is used for the business, or our intention to use in the business is sufficient for the purpose of availing the input tax credit on the services. So that is input services. Then with this, then there are some other definitions also: who is a job worker, who is a registered person, who is an input service distributor, etc., etc. We all know. There are around 120, 112 or 119 rather definitions are there. Works contract definition is there. So many are there. As and when we move on, let us see whether something is also required by us for the purpose of this study. Now we go to the charging section, enabling section, provisions. Each and every word of these sections important for the purpose of getting a correct picture of the intention of the law. It starts with saying there is no non-obstantive clause in this except in subsection 2. It directs very clearly forward sentences. Every registered person, the first person, the person who is eligible to take input tax credit is the one who is registered. Who is a registered person? Registered under any of the acts of GST. So it's a registered person. But for the purpose of availing his input tax credit, he has to follow certain conditions. Subject to those conditions and restrictions as may be prescribed. Prescribed means there is a rule. Prescribed, wherever the prescribed term appears, we can take it for granted that it is a separate rule is there, prescribed manner is there. So in that prescribed manner only we can avail that input tax credit. Registered person, who means registered person, shall means mandatory. The registered person shall avail the input tax credit or shall be entitled to take the input tax credit only after fulfilling the conditions. Okay, and restrictions. The Act itself says that there are conditions and restrictions. And how we can avail that input tax credit or utilize that input tax credit in the manner specified in section 49. Section 49 is payment by cash and by utilization of input tax credit. 49.5 is the section which deals with the utilization of input tax credit. So in the manner specified in section 49 only we can utilize that. And we are entitled to the input tax credit charged, and input tax credit we are, so in the way we can take that input tax credit. And what kind of a tax it was? It was a tax charged on any supply of goods or service, or both upon us, upon him, upon the trader, upon the person who is going to avail that input tax credit. So that tax is charged upon him. By whom? By somebody, by his supplier probably or anybody else. Which are used, these supplies are to be used or intended to be used in the course, that means for trading activity, or for furtherance of the business, that means enabling other ancillary activities in relation to the business, that is for furtherance of the business. And ultimately what should we do? Can we utilize it then and there, or what is the process? Can it be by a journal entry? No. The amount shall be credited to the electronic credit ledger for such person. It should be credited. Why it should be credited? The balance in credit ledger, normally all balances in credit ledger will be a liability for us. Is it a liability for us? No. Electronic credit ledger is the ledger maintained by the government. It is just like a passbook, we all know. Cash book, bank account is maintained. Bank book is in our books of accounts, and passbook is maintained by the bank. Passbook always shows a balance of credit balance as far as there are no overdrafts. So credit balances. Then this electronic credit ledger, electronic cash ledger, these are the two ledgers we have to maintain in the government account. These two ledgers show credit balances because it is a liability of the government towards the taxpayer. And this should be credited to the electronic credit ledger. Input tax credit, this said, the above mentioned input tax credit, after complying with the procedure manner prescribed, the taxable person, the registered person, not only the taxable person, the registered person, clearly registered person. The registered person shall get it credited to the electronic credit ledger. That is the first enabling section. If we are doing this, then you are entitled to take the input tax credit. So the terminology entitlement is there. We are complying with so many procedures formalities before we reach this level entitlement. So entitlement comes almost at the fag end of the process. Now second, what all are the conditions which are given in the section itself? Subsection 2, it starts, it's a non-substantial clause. Notwithstanding anything contained in this section, that means we have only just started one subsection. Then immediately arises this non-substantial clause that irrespective of whatever said in earlier section, subsection, for that matter, the entire section, throughout the section, whatever is said in the entire throughout the section, your eligibility or rather our input credit availment facility can be utilized only when we follow the conditions prescribed under subsection 2. So it starts with notwithstanding anything contained in this section, no registered person shall be entitled to the credit of any input unless he follows the following conditions, unless the 4 following conditions are satisfied. So registered persons are entitled, but he has to follow the procedure. What are the conditions? The 4 conditions. That he should have a prescribed invoice with him. He should hold that invoice, a tax invoice with him. He should have a tax invoice. We know what is a tax invoice issued under section 31, having all the formalities or all the parameters prescribed there in rule 46. What are the contents of these invoices? All this must be there. But we have a slight concession given. As we move forward, we will know some elements only we need to follow. We need to take and document as an invoice only if certain selected items out of that rule 46 items, out of that 19 items, we have only a few items, then we can take it as a tax invoice. But we have to have a tax invoice with us. Second is we should have received the material or the goods or the services, we should have received the material. Third is the tax thereon should have been paid to the government, that's all. Who will pay? The tax upon the supplier should have been paid to the government. Should have been paid to the government. Then only we can avail that or utilize that input tax credit. Tax should have been paid to the government. Who will pay? Our supplier has to pay. Our supplier has to pay to the government. He may be paying to the government, or he may have collected the money from us, but ensure that we have to ensure that that part of the value which gave to the supplier to our supplier, that part of the invoice, that is the tax per component, should have been paid to the government by the supplier. That is one of the conditions, stringent conditions, and that is also associated with the provisions of section 41. Section 41 is that provisionally we can avail the input tax credit. The condition, prescribed condition coming subsequent to C is, that is D is that. Subsequent condition is that we should have filed the return under section 39. We means the taxpayer, the purchaser, the person who is going to avail the input tax credit shall file the return under section 39. We know what is return under section 39, that is the monthly return. So far, monthly return was defined as GSTR number 3 only, but of late, subsequent to that decision, then 3B is also brought into section 39 as a return, and that is with the retrospective of an amendment. So we should have filed the return, monthly return under section 39. These 4 conditions are very much required for we people, for the taxpayer, that is the purchaser, to avail the input tax credit. So when are we filing this return? We are filing the return, paying tax and availing the input tax credit simultaneously. Only one date is given for us. We do not have any started date. All these 3 things happen together. That is the reason which one has taken place earlier. Whether we have filed the return and going to avail the input tax credit, or we have availed the input tax credit and filed the return by making balance payment in cash. So that vicious circle will be there. That will be overcome by section 41, saying that section 41 allows all people to avail the input tax credit, subject to the condition that at a later point of time, when we look back, we would have complied with all the 4 conditions mentioned in section 16, subsection 2. So section 41 comes to a rescue. Then in the case of this invoice as well as the receipt of goods, there are certain provisos also in that. First proviso is that we should have received the material. But when we are receiving the material, against an invoice in lots, installments. We all know, all of us know what is installments. Then we need not go deep into that. So if the goods are coming in separate consignments and it is scattered over months, these are issued against a single invoice, then only this clause will get affected. This will attract, that particular provision will attract in such a situation where the goods are coming in lots and only one invoice. So we have to wait for the last load to reach the premises for enabling us to, or rather we going for availing the input tax credit. I think there is no doubt on that. Second is that regarding the payment. So most of us will not be happy with this situation. Even though the commercial terms prescribe that we may be having more credit period than 6 months, this particular GST law prescribes us and it requires we people to pay the supplier with the value and the tax, not only the price, not only the cost of the material or the price of the material, including the tax component, within 180 days of the date of issue of that invoice. Otherwise, what will happen? We can very well, first of all, avail that input tax credit depending upon or based on the 4 conditions in section 16(2). Subsequently, if we are not making payment within 180 days, we have to reverse that input tax credit already availed, treat it as an output tax liability. Where we should put it is in the output tax liability column. We should put it in the output tax liability along with interest in the prescribed manner. That is, the procedure is also there. In the prescribed manner, we have to put it back as a outward liability, pay interest at the rate of 18% as per section 50. Then subsequently, whenever we make payment, we can take credit. But we can take credit only if we ensure that the tax component is also fully paid out. That means we cannot take it for granted that whatever amount we paid can be treated as a tax. No, partial proportionate amount only we are able to take the credit. Now comes there an issue. Is it justifiable? You may ask the question, is it justified? 180 days is not justifiable. So many questions have come from various sources. 180 days is not justifiable because we have a commercial term in a different scenario. We have commercial agreement that he may be giving more than that. Why can't it be allowed? Of late, if we are able to fight the case, there is also a provision that 180 days, if the commercial settlement is like that, if the understanding between the agreement between the supplier and the seller is like that, we are given more than 180 days credit period, then the law cannot interfere and say that we have to reverse the input tax credit already availed. Are we going to fight that? Then we have a chance, we have a loophole, we have an opportunity that commercial agreement is very much valid in the business scenario. Just because GST is having this particular clause, we cannot succumb to whatever is given in the commercial terms. So we can, that is what we are concluding, that 180 days, though it is very critically, of late, the department, of course, department will ask. No, most of the cases we would have received notices also for non-paying within 180 days. We have to answer that. If you are able to take it forward, bear in mind that there is a cost involved in that. Take it forward up to the judicial level, then we can always fight that case. But it is worth fighting the case or not, we will have to decide. Then taking back subsequently, there is no limit, any time we can take back. Okay, so these are the first enabling 2 provisions. Third one is very simple. When we are capitalizing the asset with the input tax credit, with the tax component also, we cannot avail depreciation in the Income Tax Act as well as the GST component, that is the input tax credit simultaneously. That's all. But some people have that, some notices. Today also we have come across a notice stating that just because you have purchased them, that too in one of the CA Chartered Accountant's office, we have purchased some furniture. We have capitalized that furniture, excluding the tax component. Still a notice have come has come stating that since you are getting the depreciation benefit, you are not entitled to avail the input tax credit. I do not know, rather we do not know what is the logic behind, what is the understanding of the state tax office. This kind of notices will invariably come from state tax offices. That is what my experience so far. The central tax officers have studied the law very well, but how come this sort of a notices from the department? When the law is very clear that when he has claimed depreciation on the tax depreciation on the tax component, we are not going to capitalize that tax component, means we can avail depreciation on the value of the asset and ITC, input tax credit, on the tax component. Fourth point is a critical item, disputed item, whether it is logical, whether a statutory provision can be brought into limiting the enabling provision. So subsection 4 is a limiting provision. How long we can avail the input tax credit? We can avail the input tax credit up to a fixed time, whatever be that, up to a fixed time. When the enabling subsection 1, 16 subsection 1 saying that every registered person is entitled to take the input tax credit subject to fulfilling certain conditions. If those enabling provisions are there and conditions are also prescribed, when the first subsection itself saying that the procedure and the manner are prescribed there for entitlement, we have to look into the rules only. Can another subsection build up a restriction in the availment of input tax credit? That is a time bar or time limit. Can it be brought for in matter of dispute? We can question that, but still remember, we are not for questioning. As far as possible, comply with that provision, comply, enable, because it is hard cash for us. The more we wait for availing the input tax credit, the trade is losing. So it is in our interest also. There is a limiting factor. Exceptional cases must be there, because we may be barred from, or we have omitted so many things out of ignorance. These things can happen, but we should have been given a chance. And those chances were already given, as far as we understand, that input tax credit pertaining to the first year, initial year, was available till March 2019. So after that, it is our duty to see that the input tax credit is availed at the earliest, not even wait for September month following the financial year. That means a return for the month of September. Due date of filing the return for the month of September. Due date of filing the return to section 39. That is the monthly return. That is 3B for now. 3B of September. We file it on 20th of October. And up to that time, or furnishing of the annual return, whichever is earlier. Normal due date of furnishing annual return in section 44 is December 31st. If we are filing it a little bit early, then subject to these 2 dates, whichever is earlier, that is the cutoff date up to which we can take the input tax. So these are the only 4 subsections on which we can avail. Very simple provisions, but we have to comply with these provisions for availing the input tax credit. Okay. So anything to be discussed on that, because I am only talking, and it is my interest to see that you are also engaged in the discussion. Then only we can take it for. Otherwise, 2 hours will be a monotonous job. Okay. So anything to be discussed on that, sir? Anything to be discussed out of this 4 parameters? It is very clear. All are aware. Okay. Yes, please.
Sir, can a registered person filing his IT return under section 44 AD of the Income Tax Act, can he claim the ITC as there is a restriction for allowing the depreciation also simultaneously?
See, GST law section 16(3) only says that income tax provision, it is also linking with the income tax provision for the purpose of depreciation. Okay. So income tax in depreciation in income tax, if any person, any trader is availing on the tax component, that is important. On the tax component also. So what is the capitalization figure? That is crucial. That is the determining factor. This, suppose the cost of the material is, price of the material is 1 lakh. The tax credit is 12,000 rupees tax paid. 1,12,000 rupees is the total invoice value. Under income tax, if we are capitalizing 1,12,000 rupees, then no question of availing any input tax in GST. If we are capitalizing there rupees 1 lakh, then for 1 lakh we will get depreciation over a period of time under income tax provisions, and the 12,000 rupees we will get it then and there. So it is a judicious decision of the trader. It should be a judicious decision. It's a very favorable position for the trader to avail the cash at the earliest, get back the money paid as tax at the earliest. So we are not going to capitalize that. If we are going anytime capitalizing there, we cannot avail the input tax. That is what I said. That example, classic, clear example, clear. No, it's not an example itself. It is a real thing happened. 2 days back, we got a notice that the furniture has been capitalized. So you are not entitled for availing the input tax credit. But that fellow doesn't know what is the element of capitalization there. Probably that may be the reason. So we will support, we will reply to, we will very politely reply to the officer that, to the notice that this capitalization is only net of tax. Then that is that must be the end of it. I think that is the question now.
Regarding the ITC on capital goods.
ITC and capital goods, yeah, ITC and capital goods. ITC and capital goods only. So depreciation we get only on capital goods. Other thing, inputs and other things we can straight away take. So this particular depreciation arises only in the case of capital goods. So that is clear, I think so, no? Depreciation and depreciation element. Is it, sir?
Yes, sir.
Okay. So I'm not joking that we also got a notice that depreciation you have availed. So only thing, ensure that while capitalizing, segregate the input tax credit if it is available. So we will get back the money as early as possible. The cashback is very immediate. So net of input tax only we need to capitalize. Then other points. We are going to the rules. Anything else? Documentary, that is the requirement on which all documents we can avail, because we have seen that there should be a tax invoice. As per section 16(2)(a), we should have received a tax invoice. What all are the invoices? What are the documents out on which we can avail that input tax? Of course, it is a tax invoice is there. It is a tax invoice. That means an invoice issued by the supplier of goods under section 31. Correct. Then second portion is invoice issued in accordance with the provisions of clause F of subsection 3 of section 31. Clause F, that means reverse charge invoice. Most of us, if we just have an introspection into our own practice, most of the people would have availed the reverse charge mechanism tax paid. But this component, that is the documentary requirement, has not been complied with. The documentary requirement is that there should be an invoice whenever we are procuring this material or the services under reverse charge mechanism. If the other person is an unregistered person, if it is a registered person, no requirement, no need. So under 9.3 or 9.4, if we are availing some services or goods as the case may be, and we are liable to pay the tax to the government, in such a situation, we have to raise an invoice. That invoice is one of the documents on which, that invoice is the document on which we can avail input tax credit. So ensure that that particular document is available or not. Then debit note for subsequent collection of money, debit note under section 34. What all are the circumstances when we can issue a debit note? Only 2 times. That is 2 types of transactions only. That is when there is a shortage in the value, when there is a shortage in the, or the tax rate has come low. Under these 2 situations only we can issue a debit note. Based on that debit note, we can take the input tax credit. Bill of entry upon import of goods. We will file a bill of entry. In that customs duty will be there, basic customs duty will be there, IGST component will be there, and a cess component, that is the other 10% will also be there as miscellaneous charges. Though out of those 3 items, this bill of entry component relating to IGST. So bill of entry is the document upon which we can avail the IGST upon import of the goods, because we do not have any invoice for showing the IGST. Input service distributor invoice. So input service distributor is the person who actually segregates, distributes the common inputs to the used sections, used departments, or wherever this usage has taken place. maintenance or annual maintenance contract. In the case of annual maintenance contract, it may be a practice that the annual maintenance contractor will send the invoice in the name of the head office, some other place. Maintenance will be done in the units in various states. So the states cannot avail the input tax credit because they do not have an invoice with them. Head office also cannot take the input tax credit. They would not have received the services. That is, they are not satisfying the conditions mentioned under section 16(2), 1 and 2, A and B. In that situation, even if the head office is having a registration on its own for other supply items, it should get himself or themselves as an input service, registered as an input service distributor, and a separate invoice shall be issued to the units wherever these services are availed, ANC services are availed. Then only it will become an input tax credit eligibility for the unit. So it will be a total loss to the group company otherwise. So input service distributor is that. Sections 20 and 21 prescribe the procedure there. And rule number 39 also. It is input service distributor how to do. That is a procedure. Then, but this particular rule has been modified to say that all the conditions necessary for being treated as an invoice as prescribed in rule number 46 need not be present in an invoice on which we are now going to avail the input tax credit. As per sub-rule 2, invoice should have at least these minimum requirements. These minimum requirements must be there. Don't try to say that, don't ignore these provisions. These are the serial number, date of issue, name of the supplier and the recipient, name, address of the supplier, GST number of the supplier and the GST number of the recipient if available, HSN code, description of the goods or services, place of supply in case of interstate supply, very much required, total value and the tax amount. These are the minimum requirements to be present in a tax invoice. So no ITC in respect of tax paid in persons of any order of demand under section 74, 129 or 130, because willful misstatement, suppression, etc. No ITC is claimable. This is as per section, and this is the rule 36 is related to rule. Now in rule 36, we are going to confront with the situation where rule 36 sub-rule 4. We know there is a particular provision incorporated with effect from October that whatever is, this is the sub-rule. Input tax credit is limited to 20% or 10% as the case may. It was initially 20%, now it is 10%. 20%, that is the extra amount you are eligible to claim, is limited to 20% or rather, now it is 10% of whatever is available in the GSTR number 2A. Even if we have, let us take an example there, is very much clear when we go to this example. All must be aware also, but just for clarity, we have balance of 8 lakh rupees in GSTR 2A, GSTR 2A 8 lakh rupees, and we have 10 lakhs rupees in our hand. That is invoices worth rupees 10 lakhs in our hand. GSTR 2A, it appears only 8 lakhs of tax. Then 10% of extra can only be availed over and above the GSTR 2A balance. So for easiness, I am taking it as 110% of GSTR 2A. 8,80,000 is the maximum I can avail. So maximum I can avail is 8,80,000 out of this 10 lakhs. Balance 1,20,000 I have to defer. Another situation, I have same 10 lakhs of invoice with me physically. Input tax credit of rupees 10 lakhs in invoices available with me. GSTR 2A appeared only 9,50,000. Adding 10%, it becomes 10,45,000, but subject to the available invoice. So there is nothing to be carried forward. We can avail the full credit on the basis of this calculation. But the criteria is, are we or the lawmaking people, are they right in giving a restriction when another section, that is section 43A, which has not been so far made to rule or made to act. In spite of that, limiting such a limited to such percentage is levy is standing in the eyes of law or not is a question. Most of the people, so many cases have also gone to court. Now we have to wait and see. But for the time being, we can follow. We are only subject to follow the provisions mentioned in rule number 36.4. Of course, during this period, special notification has been given to club all these items. Need not follow the 10% business in each of the months. Only when we file, we are going to file the September month return. We need to calculate, recalculate, go back and see, ensure whether all these have this particular parameter is applicable on a cumulative basis. That facility is given right now only for this temporary period. Otherwise, it is going to be the rule. Then some of the items which we need to look into is restriction applies only on such invoices which are required to be uploaded but not. Restrictions apply only on such invoices which are required to be uploaded but not. Which are required to be uploaded but it has not been uploaded. Can we restrict it? Yes, by law they are restricting it. We can either fight it out or wait for the verdict or the decision of the court on the cases filed by other people. Then full ITC against bill of entry, reverse charge mechanism, ISD. These are not going to be uploaded. Need not be uploaded. Need not be looked into for these comparison purposes. They can be fully availed without looking into GSTR 2A, because these entries in respect of bill of entry, RCM, reverse charge mechanism and ISD will not appear in 2A. That we all know. Restriction on credits availed on or after 9/10/2019. This restriction, that is this limiting factor, is applicable in respect of an invoice which is availed after, which is dated prior to 9/10, but it is availed after 9/10. Then it is applicable because it says that credit availed on or after 9/10. Even if the date of the invoice is prior to 9/10, this particular rule is applicable. Restriction not to be applied on invoices supplier wise need not be. We need not bother about GSTR 2A invoice wise, supplier wise. Only cumulative comparison is sufficient. Auto-populated invoices in GSTR 2A as on due date of filing GSTR 1 to be considered. Okay, that is also one. GSTR 1 is to be filed on 11th, 10th or 11th as the case may be. On that day, what is the GSTR 2A balance? That balance only we can take. We cannot take anything or after that. So the balance available in GSTR 2A as on date of filing the GSTR 1 of the supplier, that only has to be downloaded and verified and calculated. Then unavailed credit to be claimed in succeeding months when invoices are uploaded. Okay, we can claim it. 10% as additional ITC is limited to total eligible ITC. So this 10% is limited. We cannot take the full items appearing in the GSTR 2A. In GSTR 2A, we may be having ineligible items also, just like a motor tax on motor car, ITC on motor car, ineligible items. So many ineligible items will be there. We just conveniently ignore all those ineligible items, take the eligible items, calculate 10% on that, then proceed with the 36.2A. That is the okay. That is all about that. Then some conflicting interests are there. We can also go through that. It is there in that slide. So some conflicting interest, whether 16.4 is overriding, overruling, etc. So legally we can make use of these provisions. Another view. Okay, that is all about that 16.4. Some issues related to, so far we have seen some issues related to section 16 and the relevant rules are. What is the position of ITC upon non-receipt of goods or services? Very sure. We cannot avail the input tax credit, need not bother, need not venture into availing the input tax credit, except on certain situations, that if the goods are directly sent to the job worker or to the agent as a bill to ship to concept based on bill to ship to, then these goods are deemed to have been received by the purchaser. The moment the agent or the job worker confirms that the goods are received, that is a cutoff date. Otherwise, when we ourselves have information that it is received in our premises, then only we can avail the input tax credit, because section 16.2 subsection 2, that is B, subclause section 16.2 subclause number B, we should have received the goods or services. Goods are directly received by the job worker, of course we can avail the input tax credit. Only thing, principal and job worker relationship must be there, and the job worker shall confirm that it is received by him. Can ITC be availed if the tax invoice is inclusive of tax? No such concept. Inclusive tax is not there. We have to have a bifurcation of this type. What kind of tax it is, IGST, CGST or SGST it is. So inclusive business is not there. Part payment to the supplier, ITC position, part payment. We have to ensure that we make part payment means part of the tax only is covered. Proportionate tax only we can avail input tax credit. We cannot avail full input tax credit by saying that we have paid part of that entire part can be adjusted against the tax portion. No, it is not there. Then whether sub-rule 4 is beyond the powers of section 43A, which is not yet made effective. Section 43A, there is a special procedure coming up. Just like that, another rule is also coming, 86A. So these are some of the ensuing provisions which are waiting for us to follow. So even before coming into force of that particular section 43A, this restriction has been brought into. Is it valid? Legal people have to have a point on that. Whether the rule itself is intravious to section 16, because section 16 subsection 1 is the enabling section which doesn't have any restrictions. But subsequently when it comes down, there are certain denying factors which the statute has already allowed. But by rules and other things, they are restricting. Is that restriction will prevail or not? Then GST portal offsets normally. If we look into GST portal, offsets IGST against the CGST first and then against the SGST. If any balance is left, this can be manually edited while offsetting liabilities in the GST 3B, because utilization process 49, section 49, subsection 5, as well as section 49A and 49B and the rule 88A. There is a sequence prescribed, but the system is not modified to that extent. We ourselves have to bifurcate. We have to forcefully change that balance appearing and divide it among CGST and SGST as the way we like. It is given to us. So these are some of the items which we have to take care. We cannot call it as issues like, but some items, some entries which we have to look into for our purposes. So section 16 and the related rules are over. Now we are coming to the one of the most important area, apportionment of credit and blocked credit. All of us must be interested to know this apportionment of credit and blocked credit. In one section itself, part of it is dealing with apportionment and the later part is this blocked credit. Up to subsection 4, it is relating to blocked credit, the apportionment of credit. And subsection 5 deals with the blocked credit items. Very much interesting, very interesting. First thing is that ensure that this tax availed by us, input tax credit availed by us, must be used for the business, in or relation to the business, in the business or for the furtherance of the business. That is the clause. In the course or furtherance of the business. So business is inevitable. Business purpose is inevitable. Usage for the business purpose is inevitable for the purpose of availing this input tax credit. What happens? If part of it is used for business and part only says that it's partly used for business and other purposes. It's used for business and partly for other purposes. We can have so many contradictory provisions. Only legal persons will again hairsplit that particular sentence into so many other views. But we are not for that. We will understand in the way a common layman understands. So partly it is used for business purposes and the other parties for non-business purposes. Our entitlement is only restricted to or limited to the business purposes. So the clauses are that, the common clauses are, not looking into this aspect, the common clauses for availing the input tax credit is that, first of all, if it is fully attributable to the business, taxable supplies can take full credit. If it is fully attributable to an exempt, not business, not taxable purposes, don't take it. Should not take it. Third category is the common category. In that common category, only these things will come. If it is partly used for business and partly for other businesses, common category. Common category, we have to bifurcate that availment in the prescribed manner, rule number 42. So if it is for business purposes and for non-business purposes, take only business purpose. Similarly, in the second item, taxable supplies and for effecting exempt supplies, our entitlement is limited to taxable supplies only. If it is entirely for taxable supplies, no need for any bifurcation, go for availment fully. If any common inputs or input services or capital goods are used both for the taxable purpose and exempt supplies, then this procedure of availment on a proportionate basis is inevitable as prescribed in rule number 42. What is an exempt supply in this particular scenario? That is when we are going to apportion that. Apart from what we commonly understand as exempt supply means nil rated supply on which tax is exempted by virtue of section 11 by government by issuing notifications, and includes non-taxable supply. Non-taxable supply means not leviable to tax under this act. All these three are coming in exempt supplies. So the value of that exempt supply also includes, apart from that, other things also will be treated as exempt supply. The following items are that shall include the supplies on which a recipient is liable to pay under reverse charge basis. That is, all our outward supplies are coming under reverse charge category. We are not paying any tax at all. We are getting the turnover, but the tax is paid by on the turnover paid by somebody else, our purchaser. Then we are actually following an exempt supply scenario. Ours is an exempt supply. If we have any such item, that item shall also be considered as exempt supply, any reverse charge item. Second is transactions in securities. If by any chance any sale proceeds come into the business in terms of sale of securities, shares and securities, and a part of the inputs services may have been used for that transaction, then that particular securities, even though it is not coming under goods or services, then that should also be treated as exempt supplies in the scenario, in this formula, rule number 42. Third item is sale of land. Any chance turnover consists of something from sale of land, that should be treated as exempt supplies. But sale of land is a schedule 3 item. Land is neither supply of goods nor supply of service. Still, if we have some turnover for which, only thing, if we are using something, some inputs for the purpose of this sale of land, then we have to consider this turnover also as exempt supplies. And building, what kind of building? A building which is already completed and this completion certificate has already been issued, that kind of a building. So land and building are taken out from the schedule 3 and put it under exempt category for this purpose of calculating the proportionate credit in rule number 42. Okay, so that is all about that exempt supply, that is sub-rule subsection 3. What is these items? Same thing, we are again listing it down there. What are the exclusions? And excludes includes and excludes activities specified in schedule 3, because we are not considering it as it as supply goods or services. Schedule 3 items we need not bother, apart from, other than this sale of land and building. Land and building, though one of the items in schedule 3, we are considering those items are as exempted. Other items in schedule 3 are left out. Then banking company, we know banking company has an option only 50% eligible. 50% of the total credit they can take. Eligible credit they can get. Eligible credits. Eligible, that means they cannot take credit on the motor car. Eligible credits only they can take. What all are eligible and ineligible will come to know. So these are the things appearing to the normal taxable persons and the banking company. Then for the purpose of this 50% etc., certain things they can exclude. That is, the exempt supplies, accepting deposits, loans and advances are considered as an exempt supply. Then commission on documentation charges, guarantee fees etc., they are taxable, even though they are taxable. And if they are dealing between the dealing is the exempt supply is between two branches of the same group bank, then they can consider it as, they can take full credit, need not go for 50%. These are some of the other add-ons to that particular proviso, particular section, subsection. How we are going to calculate 42? Do we need to dwell upon some time on this? No, I think it is not. It is very clearly there. Can we proceed? Because this calculation, any need to discuss this calculation, how these common inputs are shared, common inputs are inputs and input services are shared or allocated under rule number 42. There are certain mathematical formulas, need not bother about those formulas. These are only simple terms. Just to confuse us only, this formula has been given. And this has already been once again complicated into real estate business. So rule number 42 is applicable for real estate, and there is also a reversal requirement that itself is more complicated than this simple. I am giving only this simple. Any need to discuss this item, manner in which this common input is discussed, distributed Dear colleagues, any need to dwell upon this?
Anybody wants to have the details on this? Or else I think, sir, we can distribute the slide on this working. That
Yes,
will be
yes.
better.
Okay, that will be better. Okay, because time constraint is there. Okay, rule number 42. I have given an example. Go through that, and we will come to know what exactly is the amount to be very clearly mentioned there. And you would have practiced this also. Okay, just to have a review on that. Final reversal. Upon once we combine this and the amount required to be reversed is found out, that should be reversed with interest, and that should be shown as an outward liability also. That is, it shall be paid separately. 42 final reversal if upon completion of the, that is upon completion of the tax period, 1 year is over. After that, we have to take the cumulative figure, total figure, work once again, rework, find out that something more is needed to be reversed, then reverse that through DRC 03 or 3B as the case may be, but with interest. Anything extra to already reversed is more, monthly reversal is more, then we can take it back in the subsequent months. That is the practice. Rule number 42. Then we come to the blocked credit. Probably we may be having some questions and some discussion points also in that area. That is the 17.5 items. First item is transport, that motor vehicle. Without looking into these things, we will just discuss these things. That is, motor vehicle used for transportation of people, that is transportation of persons. Till the Amendment Act coming into force, this passenger transportation vehicle was totally and not entitled for input tax credit, passenger transportation. But only 3 group of people were entitled to avail the input tax credit on passenger transportation. That further supply of such motor vehicle, that is dealers in motor vehicle, then they are engaged in transportation of passenger business, either bus or operators of buses or operators of car, taxi car, etc., etc. They can. Then the driving school. 3 categories. Now, after the Amendment Act, if the seating capacity is more than 13 passengers, that is including 13 passengers and plus 1 driver, more than 12 passengers, so that means 13 passengers and 1 driver. Our requirement is that it should be more than 12 seats, so passenger seats. That means it should have minimum 13 passenger seats. Then we can avail such kind of transportation of passenger vehicles. So some of the travelers used some vehicles used for transportation of its employees, etc., used in the business. If they are using this travel or their own vehicle, traveler of their own, then they can avail input tax credit on that. So passenger transportation vehicles are very limited in that is entitlement. When come to the transportation of goods, no problem. Transportation of goods, entire vehicles. If it is a vehicle, a transport vehicle as per the Motor Vehicle Act, don't manipulate in the body so as to make it as a transport vehicle, although it is a passenger vehicle. Such sort of a manipulation shall not be done. It should be a motor vehicle transportation which is equipped to transport goods as per the Motor Vehicles Act, is entitled for input tax credit. Then some other things related to the motor vehicle. If the motor vehicle is eligible otherwise, as mentioned in A and AA clauses there, 17.5, then the general insurance, servicing, repairs and maintenance attributable to that particular vehicle, vessel or aircraft will be eligible. It means that earlier, before February 2019, these were not eligible. That would have been the interpretation. But we can always fight it again. As I said earlier, there is a scope for fighting it out legally if it is worth fighting it. Otherwise, the department will say that this is the intention. So since it is included from the Amendment Act onwards, earlier it was not eligible for input tax credit. That may be their version. We will have to come out with our own arguments. Then input tax credit interest paid services will be available. Which one? Provided that the input tax credit interest paid services shall be available if it is otherwise used for eligible category. It's okay. Then the items, food and beverages, one category, food and beverage outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, another group, leasing, renting, hiring, third group, Then life insurance and health insurance. These items normally, if expensed by, or they have availed, that the business is availing these services from an outsider and is having an invoice for that, having that input tax credit also therein, the tax is also therein. These taxes relating to these aspects are not eligible for input tax credit unless when these services are used for giving a service of its own in the same line of business. In providing a same outward supply, these sort of inward supplies are used, means eligible. Otherwise, these food suppliers are in the same line of business. The supplier as well as the person who is availing the input tax credit and his supplier are in the same line of business, means we can avail that input tax credit. That is the common items. Then membership of a club, health and fitness center. We all know these items are inevitable in a big business scenario, like the chief executive officers will be given free membership of a club, etc. Health and fitness may be very urgent for certain types of businesses, may be required, which is very important for certain types of businesses. For example, security services. Security services, the service provider may be giving health and fitness centers, or rather establishing health and fitness centers, or in most of the public sector companies also, they may be having their own health and fitness centers so as to make use of, to be made use of by the employees. So such sort of things are part and parcel of that business, inevitable element of that business. In the ordinary course of that business, these are required. But specifically, it is disallowed in this category. Of course, there is also a chance to fight out. If it is part and parcel, without that, this particular nature of business will not happen. Means it is for the business, it is used in the course of furtherance of the business, just like what I have said in the case of security services, health and fitness. It is required. So take a call in that. Membership of a club, because membership of a club will be very urgently required, very inevitable for some sort of businesses. Their evening meetings in the club may be attributing to furtherance of the business of the person or the business entity. Then that will be a business expenditure. Though it is given free to the chief executive officer, it will be a business expenditure. Then we can always look into that aspect also, whether there is a scope for getting that, if it is worth availing that. If it is material value, then we can go for that. Sometimes the membership of club may be around 5 lakh rupees per fees itself. Then monthly also some 50,000, 1 lakh may need to be paid for that. So such sort of cases we can look into. Travel benefits extended to employees on vacation, disallowed. This practice is always there in companies, enterprises, public enterprises also there, and the banking employees also, they are given this benefit. So as far as the business is concerned, they are enriching, the employees are getting regenerated. That means they can now work with more enthusiasm. So that may be adding to the profitability of the organization. Still, specifically it is disallowed in that category. Works contract services items. Works contract C and D, important item. We have to now look into the definition of works contract and clearly identify, is there a chance for us to have a tax planning? Can we spend 2 minutes on that? Because it is worth spending 2 minutes. Works contract means a contract for building, construction, fabrication, completion, erection, etc., etc. I think you can see it or not. Let me see. Can I take a pencil? It is not there, right? Okay. So these are the works contract means 14 items. A contract for 14 activities. What all are there? Building, that means verb. Building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration, or commissioning. 14 items are there. 14 activities are there. All these 14 activities cumulatively call as works contract when it is applied on an immovable property. The outcome is an immovable property. The resultant goods is an immovable property, or resultant outcome is an immovable property, wherein there is transfer of property and goods, etc., etc., take place, but not in that form of that bricks or steel or like that, but it is in the form of a building, an immovable property, or a machinery like that, is involved in the execution of a such contract. So this is the Works contract definition. Just carefully look at 14 items building. Now, what is the excluding clause here? Works contract services when supplied for construction of an immovable property other than plant and machinery. So plant and machinery, we can clearly take input tax credit on plant and machinery. Works contract service is provided in plant and machinery, no problem at all. But for other immovable property, construction of an immovable, what else is there for in the category of immovable property? Structures, buildings, etc. What is disallowed there? Out of these 14 items were, that is activities comprised in works contract services, works contract, only one is taken out. Construction of an immovable property is disallowed. Construction. What else the other? Building, fabrication, completion, erection, insertion, etc. etc. What else? What about the 13 items in works contract definition? Can we take a clue from there? You decide. So construction only is taken out. We have a case. We are now proceeding with this argument. Substantial amount involved in that. So we are now taking that is a particular stand that out of this 14 parameters which constitute a works contract, services constituting a works contract, only one of the item is blocked. That is nothing but construction. All others are eligible. So when there are fabricatory works, installation, erection works, etc., or then we can avail that. Furthermore, what is construction? That is also defined. Construction includes reconstruction, renovation, addition, alteration, repair to the extent of capitalization. So capitalization is critical. If it is charged to P&L profit and loss account, no question of any disallowance. It is not a construction at all. So we can avail that input tax credit again. It is not construction. If it is not construction, it is not works contract. If it is not works contract, there is no disallowance. So out of these 14 items, we may take out something more. That is, repair is there. Here also repair is there. Something is there. Repair is there. Then addition, alteration, some renovation is there. Then those things also we can. Balance items I can. So fabrication works, it is not there. Building, it is not there. Building work, it is not there. So it is an extended argument only, no? So depending upon the stake involved, take an argument like that. Then we are also going to fight upon that in one of the cases. We will see what will be the outcome. Except where it is an input service for a further supply work. That means subcontract work is always available for the contractor. Subcontract input tax credit is available. Then the next one is similarly, a person who is availing the works, instead of availing the works contract, he is providing a labor contract and he sources the material for the construction of the building. Then also, so law also knows that this type of planning will be there between or in the midst of clever people. They may choose to manipulate these things, split that contract, works contract into two. Then it will not be a works contract at all, labor contract, and the supply part will be made by the owner himself. Still then it is not eligible. So that is also blocked. Works contract is blocked, subject to the exceptions. Case laws are also there. Then okay, before that, crucial items. Other blocked items are 1 or 2 are only important here. Goods or services which are coming under section 10, that means composition. We have seen goods or services brought by the NRTP, non-resident taxable person. Whatever goods he sources from inland, that is within domestic area, it's not allowed. Input tax credit he cannot avail on that. But whatever he imports from other countries, whatever he brings in from outside India, imports, that is eligible. Then goods or services are both used for personal consumption. Okay, we know personal consumption should not be used. We have a case on that, or rather we can actually understand what is the situation. It is not used for business purposes. Personal purposes, we have to agree with that. But the other thing, what happens? H, goods lost, stolen, destroyed, written off or disposed of by way of gift or free sample. I know that we members have a lot of questions on this, but goods lost, stolen, lost means lost forever. It is not used in the business. Stolen, equally important. Destroyed, that also, it's not used in the business. We have availed input tax credit. If you have availed input tax credit upon receipt, While in stock it is destroyed, we cannot avail it. We have to reverse that credit. Return off, simply return off because deteriorated. There is no value for that item. Return off. That means we will have to reverse the inputized credit. Last one, disposed of by way of gift. Gift. That means no consideration. That means if it is disposed of by way of gift, we have to reverse the inputized if available. That means inputized credit is not available for gift because there is no consideration that is not a supply item. So we cannot have a inputized credit on the item gifted. And free sample, dispose of as a free sample or giving us a free sample. Free sample, we have a number of examples there. But the question is, in respect of items, the goods lost, stolen, destroyed, written off, or disposed of. What is the meaning of that in respect of items used for this? If we have purchased and then removed, then it's okay and used for these purposes. If we have purchased a raw material, made out something, and that item is disposed of for as a free sample or gift, will it attract the inputized credit disallowance? There are two views that also we can fight out. In respect of those items, I have not availed any inputized credit in respect of that final output. But in relation to that final output, I would have taken inputized credit on the raw material because raw material is used for that further output. That way we can interpret, and if planning is possible, try that. Otherwise, just follow these things. Then in the case of goods lost cases, normal loss need not be reversed. Normal loss is an inherent in it. Natural loss, normal loss. Abnormal loss, if it is there, then only we need to reverse. Then last item, 74, 120 and 130. That means fraudulent case, recovery on fraudulent cases. 129 details of the vehicle and details of the consignment and the vehicle. And 130 means this confiscation of the vehicle. We cannot take any inputized credit if we have paid the tax. The tax is gone forever. Okay. Sometimes even if there is a chance that if some assessment comes on there, if we are able to prove that, and if the department is willing to give back that money, then it's okay. It's favorably housed. Government may prescribe the rules. So 42 and 43 are also there. That blocked credit does not cover goods lost during manufacturing. Okay, on case law is also there. Other things, case laws. We are not spending time on that. Then goods get buy one and get one free. Is it a free? Secondary discount. What is the norm for allowing the discount? As specified in section 15.3, there is a clause that is availability of in this discount or the procedure for maintaining the discount, etc. So what all are there? Is it a discount allowable? Then what is the ITC on that aspect? Then gold coins which are distributed. Definitely if the gold coins are purchased and tax credit has already been taken, if it is given along with the other purchases, then ITC shall be reversed. No second thought on that. But buy one get one free. One is free, but that is not actually free. We are getting 3 items material for the value of 2 items. That way it is not free. No need to further reverse any inputized credit. If that kind of a sale is taking place, it is a business scenario. Second, discounts if it is shown in the invoice upfront, there is no need for any reversal of inputized credit. It is an allowed item. Subsequently, if discount is given, then that is secondary discount, incentives, whatever way we call it as, that is allowed only when there is an agreement prior to this sale itself. The inputized credit on the credit note issued for this discount shall be reversed by the recipient. So 3 conditions. 1, an agreement must be there. Then a credit note should be issued for that discount amount. Then the tax on that discount should be reversed by the recipients because he has already availed the full credit based on the original invoice. That portion of the credit note, tax on the credit note shall be reversed. Then there is no need for any, that is, we can avail that benefit. There is no need for any reversal on gift items, etc. So Then what is a machinery and plant is defined. It's okay. Some examples of eligible items: laptop, truck used for capital goods, etc. Reverse charge item, receivable. Zero rated supply means supply to SES and exporter. So it is as good as taxable supplies. It is fully eligible for input tax credit. No need for reversal. Thinking that it is a exempted item, no tax is paid. It is eligible outward supply. Goods used for repairing office building. So long as it is not capitalized, it is an eligible item. We can avail all those expenditure, paint and all other repairs and maintenance items. We can claim input tax credit since it is not getting capitalized. So restriction is only on capitalized. Construction, okay, that we have already discussed, right? Other items, earth movers, etc. All other equipments eligible now. Then so many other things. Now, if any capital goods is used commonly for taxable and exempted items, how to segregate? If it is used fully for taxable item, no question of any this sort of a bifurcation or allocation or segregation. If it is used exclusively for a non-taxable item or an exempted item, no input tax credit shall be availed also. In between, if that capital goods is used both for taxable as well as commonly used for taxable as well as some exempted items, then each month we can take the full credit in the first month itself. Upon complying with the section conditions mentioned in section 16(2), we can avail the full credit to first day itself, first month itself. Then starting from that month onwards, every month we have to reverse a portion of the ineligible credit. Ineligible credit is calculated based on the formula that based on the turnover of that particular tax period, a portion of the tax portion, that is 1/60th portion of the tax element, shall be the eligible amount for that month if that portion is used fully for taxable purposes. If a part of an exempt supply is there, to the ratio of that exempt supply to the total turnover for that month, this 1/60th shall be reversed. That is given in a formula like this is in nutshell. Given an example also there, it will be very easy to understand. And ultimately what happens? At the end of the day, there is no, that is, if we are, if in any of the months, so likewise it is given, if any of the months there are no turnover, then based on the previous turnover, we have to work out. Each month there is a interest liability, that the amount of reversal is to be effected with the payment of an interest, depending upon the useful life of 60 months as per the provisions. And at the end of the tax period, no question of any final calculation as available in rule number 42. Last portion in the sense means in that group, that is section 16, 17, 18, there are certain specific area availability in certain specific circumstances, ITC in certain specific circumstances. We will just list down those items. You can read, or we are having information about that. First item is that we are actually getting a registration in the course of our business. So far our business is not registered. In the course of business, on a fine morning, we find that the aggregated turnover exceeds this 20 lakhs or 40 lakhs as the case may be. 40 lakhs, bear in mind, there are certain restrictions on that. One notification has not come so far, but 40 lakhs, so many people are following the maximum level. Threshold limit as 40 lakhs for traders. That is not sufficient. The state government has to actually seek a permission to exclude the interest portion, so as to consider within that 40 lakhs. So those things are there. Government has already given, that is especially our state government. Most of our people are now taking the 40 lakhs without much thinking of those provisions. Okay. Anyway, that 40 lakhs, and especially that exemption for that 40 lakhs has come in section 20. The notification has come in section 23, not in section 22, which is the charging section. Okay, what would it be? The point is that a person who has been in business, one fine day he is reaching the threshold limit, he has to apply within 30 days. If he applies within 30 days, he will get registration within a particular period. within the ensuing 1 or 2 weeks. Within that time, he will get the registration. He is eligible to take input tax credit on the stock held on the cutoff date. He will be given retrospective registration, date registration. That date will be treated as a 0 date on which he is entitled to take input tax credit. Whatever input tax credit available there on the stock, only on the stock, then he can avail that credit based on the subsequent points or by adhering to the subsequent subsections also. Second item, a person who is voluntarily taking registration. But in this case, his input tax eligibility is on the date of the registration, date of registration. The date as mentioned in the registration letter. The other first case, it is not the date mentioned in the letter. Invariably, we will get a letter with the retrospective date. But in the second scenario, voluntary case, he will not get a retrospective dated letter. Right. Third is when a person who stops as a composition dealer. So far, he was not eligible for input tax credit. Now he becomes a taxable person, normal taxable person. Then he can avail input tax credit on the stock as well as on capital goods, but subject to the parameters. The eligibility criteria is again defined in Rule 40. That means for that, in the margin I have mentioned that Rule 40 at the rate of reducing 5% points per quarter. Reducing that 5% points per quarter, balance portion, on the balance portion, take the input tax credit. And that also is liable for Rule number 43 subsequently. Okay, on the capital goods. On inputs and capital goods, he can avail composition dealer. Similarly, a person who is so far dealing in exempt supplies, exempt goods, now he is becoming a supplier of taxable goods. He also can avail the input tax credit on the stock as well as on the capital. So in two scenario, capital goods is available. In the rest of the first two scenario, capital goods is not available. Input tax on the capital goods is not available. Second scenario and third scenario, that is exempt person, that is a composition dealer becoming a normal taxable person, and exempt supplier becoming a taxable supplier of taxable goods. Capital goods is also eligible, but input on taxable goods is also eligible, but always clearly set apart, give back 5% per quarter. Mostly, and file a return, that is ITC 01 shall be filed as per Rule number 40. But the funny part of it is that second subsection says the entire thing available shall be purchased within 1 year. That means the invoice available with you shall not be dated more than 1 year back. It should be eligibility is on all purchases which are items coming under or lying there in the stock, as well as the capital goods. The purchase should have been within 1 year. Then only this provision, this benefit will be available to. Then, where the third special category is when there is a change in the that is the constitution. In that situation, the input tax credit available with the transferor business can be carried to the transferee. Condition is that it should be that going concern transfer. He has to file ITC 02. Transferor shall file the ITC 02. Then he approved it. The transferee can accept that, shall accept that. Then it will come to and sit in their ledger. He can pass necessary entries in the ledger, continue availing that input tax credit as per Rule number 41. Fourth point is regarding where the registered person avail the input tax ought to pay tax under section. That the opposite of whatever we have said in C and D of 1. The opposite happens. A normal taxable person goes to composition dealer, and one of the supplies or the supply so far which is taxable becomes exempt. Then he has to pay back whatever is available existing in his books of accounts or rather in his electronic credit ledger and pay back the money after utilizing it for paying off balance unutilized period of the capital goods. So whatever is available as input tax credit can be utilized for paying the unutilized period of the capital goods. Unutilized period means the remaining useful life of the capital goods. That is 60 months less the used period. Balance is the remaining useful life based on that formula given in Rule number 44. But you always find a situation that rule number 44 is for reversal of the credit. In that situation, we take 60 months as the life of the asset. But in availing cases, we take as 5% for every quarter, leave 5% per quarter and avail balance. But in case of situation, in a situation of reversal, 5% is, that is the 5% per quarter is not there, but it shall be treated as 5-year period having 60 months life cycle. Whatever is the, how many number of months already over, balance is the remaining useful life of the month and life of the asset. On that basis, the reversal shall take place, right? Then in the manner prescribed, because we have rule number 41, then rule number 44, etc. Rule number 40, these 3 rules are there. Now, in the case of supply of capital goods, that is the most important item in that particular scenario. If we are supplying capital goods by any way, we are disposing of before the period of 60 months, before the time period which is required to be kept by the taxpayer, if availed the full credit, if we are paying by disposing of that machinery or the capital goods, then we have to reverse the tax relating to the remaining useful life. But the remaining useful life here, it says 2 subsections, that is rules are applicable here. If you look at rule number 40 sub rule 2 and rule number 44 sub rule 6, there we find that reversal in the case of section 18.6. So 2 rules are specified. What we can follow? It's rule number 40 sub rule says 5% per quarter. Rule number 44 sub rule 6 says 60 months lifetime. And these 2 rules are applicable in a case of 18.6. What should we do? We have to take a call that if it is a reversal, take it as 60 months. That is the thumb rule we are following. So reverse based on the 60 months period of lifetime of the asset. Ignore the 5% per quarter. And this sort of a calculation is not required when capital goods are such that it is a refractory bricks, then mold, dies, jigs, etc., etc., where the shelf life is nil, rather they gets consumed within that process. So there is no question of any this segregating or rather allocating the useful life, balance useful life in terms of 60 months. One more point is that whatever be the value fetched on that, what will be the tax, normal tax applicable? These 2 components shall be compared. So find out a value as per rule number 44 sub rule 6. Then again calculate the transaction value. Based on the transaction value, what is the tax payable in the normal course of business, applying the normal tax rate. 2 figures are there. Whichever is higher shall be given to the government, shall be paid back. That is the amount to be reversed. That is all about this point. That is the first section. But I'm not able to. Okay, section 49 is regarding that payment. I'm not going into rules 40, 41, 44 and but certain points to be noted in the payment part, that is the utilization of input tax credit, because it is important. So far we have been following the principle mentioned in rule section 49.5, that first you use IG. So this case that case to case, that is 1-to-1 usage is possible first, that is IGST to IGST, CGST, CGST, SGST, etc. CGST, SGST cannot be cross utilized. If any balance in IGST, it can be set off against CGST, SGST. If any balance in CGST, it can be set off against IGST also. But CGST, SGST mutually cannot be set off. These are the conditions. This has been changed or amended, modified. Some clauses have been changed. The A, B, C, D clauses have been changed. C, E, and F are now available, valid there. What is the change? The change has come in section 49A. Section 49A made it possible, or rather it said that CGST and SGST, not speaking about IGST, CGST credit and SGST credit can be utilized only after IGST is exhausted, that's all. So touch upon the CGST or the SGST as the case may be, only if the balance in IGST electronic credit ledger is nil. First of all, exhaust, wipe off the IGST balances. How to utilize that IGST balances using the principle laid down subsequently. Subsequent section says that 49B says that government will prescribe the order and manner of utilization. They have just washed away, that washed their hands and said government will prescribe. That particular section only says government will prescribe the manner of utilization of IGST, CGST and SGST. Now, based on that 49B, Rule 88A has come. It says IGST credit shall be exhausted fully because it is already mentioned in 49A. That should be followed fully. How to utilize that IGST credit? First, it should be set off against IGST payable. Then balance, if any available, set off against CGST or SGST in any order as you like. There is no priority for CGST or SGST. Which way it is beneficial for the assessee, we can utilize the balance amount in IGST and pay off. This is a confusing area. So many people are making mistakes and paid more also. We have come across cases where more amount when there are IGST balances or CGST balances, people have paid cash. So take a thumb rule. What is the total credit available? What is the total liability payable? If the credit available is more than the liability payable, ensure that there is a scope for planning properly. Even otherwise, there is a proper planning will facilitate that is optimum usage of that input tax credit. So first thing, IGST, take IGST, pay off against IGST, then CGST or SGST in any order. After that, take CGST, pay for CGST, then balance if any left out, utilize it against IGST. Now question of going to SGST. Similarly, take SGST, some payment would have been set off with the IGST already. Okay, after that, what is the IGST payable amount? Is the payable amount there? Take the SGST input tax credit, set it off against SGST payable, balance payable there. After setting up IGST there, some balance will be there, set off against IGST. After setting up with IGST, balance will be there, SGST, so set off against that SGST. Still, if any balance is there, not utilize against the CGST, but again utilize against the IGST liability if any available. That is the order of utilization. Rule 88A, it is there. Then what will happen if there is an excess availment of input tax credit without complying the parameters mentioned in 16, 17, 18? Department will view it as either 73 or 74 category, that is ignorant or other fraudulent. If it is an innocent that is inadvertent mistake, then as per section 122 penalty, that it is 10,000 rupees or 10% of the tax, first case, whichever is higher. So minimum 10,000 rupees, whichever is higher, shall be paid. If it is an inadvertently that mistake has happened. If it is a fraudulent, because we get notice always in inferring 74.5. So in the notice we used to see 73.5 or 74.5. Usually it comes under 74.5. 74.5 means it's a fraudulently with a willful misstatement, willful intentionally they have committed that mistake, shall be liable equal amount of penalty. Penalty equal to 10,000 or tax amount whichever is higher. So 10,000 or equal amount of tax whichever is higher. That is the penalty provision. This is the penalty provisions. With this, we have completed the section 16, 17, 18 and that particular relevant area. Anything to be discussed, because we are now reaching 8:50. At least probably we may get some 5 minutes more now. Job, that is input tax credit on job worker, nothing to be worried. That is, we have to get back that inputs. Of course, we can take the input tax credit on the material which is directly sent to the job worker, section 19. Without paying any tax, it can be removed from the principal of the job worker also by following the procedure mentioned there. Then, secondly, that input item shall come back within 1 year. If it is a capital goods, it shall come within 3 years. What happens if it is not coming back? It should be treated as a supply from the very beginning, from the first day. That is the point. That is the catching point. It should be treated as a supply from the very beginning, first day of supply. Then effective date, etc. It's okay. 1 year, 3 years, okay, right. Then the principal can supply from the job workers premises also. provided some conditions are, he should be registered or she should add it as a additional place of business. 143 section 143 is the procedure for that. Section 143 job work procedure clearly mentions that responsibility is cast upon the principal. That's all. Okay. Then input service distributor, section 20 and 21. 21 is for excess distribution, 20 is the ISD concept we understood. Now the ISD distribution, what way it should be distributed? This is the scenario. Like if the input service distributor, that is head office, and one of the units to which it is to be allocated are in the same state, then the bifurcation of CGST can be in CGST form and the SGST can be in SGST form and the IGST can be in the IGST form. 1-to-1 second allocation is possible. But if the ISD and another unit is in a subsequent state, it's a different state, then entire thing shall be distributed to these other states in different other units in different states in the form of IGST only. That is the only thing to be noted. That means if the head office who is distributing ISD invoices in the form of ISD invoices, if the head office is distributing to a unit which is also in the same state, that same type of distribution is possible. 1-to-1 distribution is possible. But in the same scenario, the distribution is of IGST, CGST, and SGST, but that distribution is to another unit in another state or subsequent units, a number of units in multiple states. Then the distribution shall be in the form of IGST only, for which an ISD invoice is required to be issued, ISD invoice under section 20. Then what is the segregation formula? It is based on the turnover of the unit. If the turnover of the unit available for the previous year, then based on the turnover of unit of the previous year. If the turnover of the units should be working in the current period also. If they are not working in the previous year, if any of these units were not appearing in the previous year scenario, then the previous year turnover should not be taken for calculation of the segregated amount. Then what should we do? The turnover of the last quarter just immediately prior to the tax period. That shall be taken. Last quarter, where all the units are operational. That is the turnover ratio. And an example is also given there. One of the clear examples, segregation regarding segregation, and that with that answer is also given. These are the questions. The 2 pages take different scenarios, turnover, and the different scenarios are also there. How to distribute that may be worked out, and this may be useful for the students who are undergoing exam, that is a CA final. This is an example that can follow. And the answer is also given there, how to distribute and what are the points there. Now only I come to know that I heard one that is a sentence in the beginning itself. That is while welcoming, the chairman has welcomed the students also. I do not know whether students are also available. If they are available, they can make use of this example for their final examination. And it's not signing out. Okay, something. Cancel. Okay. Okay. We are now coming to the conclusion. Something manner of recovery of extra distributed. It will be taken back by the government with the penalties as applicable for 73 as section 21. And that's all. That is the last part of it. And we are now 8:55. So 10 minutes more we have taken. 8:45 was the. I am just. I will stop this presentation. Then it is time for us to have a few minutes discussion if people are or my dear colleagues are willing to, because the number strength has come down to 50. I can understand any points to be discussed. PPT has already been shared. Yeah, PPT is your chairman will distribute to you through the mail. It is already there. Any questions? 1 or 2 questions are there in the chat box. That also we will just try to finish up. One question is, can I read it for 5 minutes? Yes. Also we can take now. We can take 5 more minutes. 5 more minutes. 5 more minutes. So .9 we will stop. A registered person providing different services, and one of the services is transportation of sand. Okay. Contract of sand transportation is with the government, and GST is being paid by the government on RCM basis. GST is being paid by the government on RCM basis. Okay. Why should be? Okay. Can the assessee claim input tax credit on other services? Is there any finality on the interest charged on the delayed payment with respect to working interest on gross or net basis? Department is pursuing a notices sent for charging interest. Okay, that portion so far no notification has not come. So you're talking about the delayed payment interest on the total value. No, that means they are asking without setting of the input tax credit, interest is calculated or charged or notice is given for the gross amount. Probably that may be the question. Anyway, we are saying that we are not bound to pay the interest on the gross amount because council has already decided and notification only is waiting. So we will frame an answer saying that the intention of the government is to not to charge interest on the gross amount but on the net amount after setting of the input tax service. Then first part is registered person providing different services. So he is a tax registered person. One of the services is transportation of sand. Transportation of the sand, that is, we also have to look into the exemptions. Notification number 12/2017. Transportation of goods by road is exempt except GTA and courier services. If the transportation of the goods is by an ordinary transporter, there is no question of any tax payment. If tax payment arises only when the transporter is registered as a GTA, goods transport agency, and issues a consignment note. So in the ordinary course of our transportation by lorry and other means of transports, there is no question of any tax element at all. So how come that payment of transportation in this scenario, that tax on this scenario arises, is a question to be reviewed or to be re-examined, because there is no consignment note issued by the lorry transporter to the consigner or the consignee. Probably all the people, they are just the quarry or the seller, the supplier may be calling one of the vehicles from the road, or maybe as a common contractor for him, supply contractor, transportation service contractor may be there, utilizing that service. That service is for transportation of the goods by road. That particular transporter is not issuing any consignment note. He has a registration in the GST scenario. That is, he may register as a transporter in the GST portal because he has to register. But other than that, he is not having any liability. He is not collecting any tax. He need not collect any tax. That is the scenario. But in this situation, the contract of sand transportation is with the government. So government is the on behalf of the government, this transportation is taking place. What kind of a service then it is? Is it 9/4 service or something like that? 9/4. So 9/4 is not applicable also. 9/3 is also not applicable in the case of transportation of goods. So that scenario will have to again look into what is exactly the business scenario like. And GST is paid by the government on RCM basis. Why should government pay that? That is what we are yet to understand. Why should government pay on RCM basis on the transportation service availed by the government department is an item to be examined. Suppose inadvertently if they have collected that money or paid the tax, then the assessee can claim input tax credit on other services. Assessee, so if a reverse charge, if a tax is paid under reverse charge, it will be treated as a service of exempted supply. We have seen that exempted supply. Suppose in any case, suppose it takes that this is correct. I am not getting the exact scenario, but presume for a time being that this is taxable in the hands of the government. Then our supply, the transported supply, is paid by tax on the transported supply is paid by the government under reverse charge mechanism. Then for this, that is the segregation of that apportionment of this common inputs. When we use the formula exempted supply to total turnover, in that exempted supply, this supply will also be considered. So it will also be treated as an exempted supply, and to that extent, that reversion shall take place. That is one answer. I think if anything more is required to be clarified, just send me a mail. We will examine that scenario, and I have given that my mail ID in the presentation slides also. You can mail me what is the scenario. We will discuss over that for the sake of convenience of all other people. So queries there. Where do the interest rate of 24 applicable? Yeah, only in one case, two situations. Go to section 50. There, section 50, this 18% and 24% are applicable situations are mentioned. 24% is applicable only when that particular situation comes under Rule 4210 and Rule 4310. Sorry, Rule 43, no, Section 42 and 43. That is matching. Matching of goods. Section 42, subsection 10, and Section 43, that matching of that discount, matching of that credit note. So matching of the credit note takes place under Section 43. Matching of the goods with the GSTR 2A by the system takes place under Section 42. So Section 42 and Section 43 are relevant sections. In that, go to subsection 10, 42 subsection 10, where a case of mismatch under 4210, then 24%. In the case of mismatch under 4310, there also there is a 24%. Only in these two situations, 24% applies. So in all other cases, 18%. So repeat 4210 and 4310. See whether our scenario comes under that category. Mismatch of the tax availed when compared to other supply invoices. If there is a mismatch, ineligible credit, etc., then that is read 4210 and 4310. If that particular scenario is applicable, 24%, otherwise 18%. Okay. Then is it mandatory to avail and reverse the ineligible input tax credit in GST 3B6? Okay. I want to stress upon this point, because when we go to assessment, Section 59 assessment, self-assessment, what is mentioned there clearly, because one full session is required for explaining a single sentence there. That is Section 59 assessment. What is self-assessment? Self-assessment also means that if anything required to be shown, there is an explanation in 74, Section 74, which is leading to this particular assessment under Section 59. Explanation 74 says that if anything which is required to be shown, any information which is required to be shown there is not given, that will also be treated as an irregularity. Then it will attract penal provisions. So ineligible input tax credit should be shown in 3B. There is a provision for that. In 3B, we have to show that just because we cannot take any net figure there, show it under that ineligible credit, or take it there. What all things are required to be brought into 3B are mentioned. Show there, then don't take credit. Otherwise, it will be viewed as an item which is required to be mentioned, an information which is to be given but not given. 74 will attract. Ultimately, it will be affecting our self-assessment Section 59. Scrutiny can come anytime. Okay. Then could you please share the already shared? Okay. Then it will be better if you share the PPT. Okay, that's okay. Already shared. There is any option to correct the amount reflected in electronic credit ledger if that amount is wrong. Now, that correction is only in respect of electronic cash ledger. Now, a new scenario has come. If I inadvertently paid something in, remitted something in IGST instead of CGST, Section 19 earlier Section 19 of CGST Act and 77 of IGST Act and SGST Act, 77 of SGST Act. These things are now that is rectified. But electronic credit ledger, it's not possible. What we can do is see whether any suitable invoices in the immediate future are available, can be set it off against the wrongly posted item. That is only way we can manage something. We can manage. Okay, we all know how to manage. That is, identify some IGST invoices separately, see whether it can be fit into in extreme situations. Otherwise, correction is not possible. May be possible with the help of the department officer. Go to the, if the amount is substantial, go to the that is the system people. Sometimes may be possible. Otherwise, if they are, mostly the first answer we get from the officer is that it is not possible. There is an option to correct the amount reflected in electronic credit ledger if that is amount is wrongly posted. We can make only rectifications. Utilize that. and pay by on the same day, utilize it and pay by 3B or DRC 03, something like that. Only a journal entry like that. Journal entry means a rectification entry only can be thought of. That's all. Okay. I hope these are the only questions available in the chat box. Now it is already time exhausted. I don't know. You have
one more question in the chat box.
Okay, I am very doubtful whether my colleagues in Kannur are having a habit of late sleeping. Okay. Anyway, just for the sake of myself, today at least make it comfortable. At least I am very happy to see that 43 people are still there. That question is not there, sir.
Sir, that is a claim privately, I think, Mr. Jara. In case of reverse tax, can I pay tax for financial year 2017-18 and take input tax credit now? Also, in case if I have wrongly paid the reverse tax, which was actually not there, can I take input tax credit of that amount?
First part is very clear. Anytime we can make payment. So it is payment to the department. DRC 03, we can make payment. So second time, input tax credit availment. You can fight for a case if the amount material is substantial. When have you paid the tax? We are paying tax only right now. So that is my cutoff date. I have so far I have not paid. I have paid it right now only. At the time of payment only, I am generating an invoice. So for making a reverse charge item, payment of a reverse charge item, the person shall generate an invoice. That invoice, if you are able to make it right now today, then there is a chance for you. I am only saying that there is only a chance. Chance means if you are willing to fight it out, there is an opening. Otherwise, the cutoff date is over, because with respect to the time limit, input tax credit shall be availed for the period of 17-18. We could have availed it till March 2019. That was the last day on which we could have availed that. So if you are willing to or prepared to fight for, there is a chance opening. You say that the reverse charge payment is making, you are effecting today only. For making a reverse charge payment, we have generated an invoice. That invoice I have generated today, and for that invoice, my time period is available. There is a very remote chance. Only if you are dare enough or willing to fight it out, there is. Otherwise, the time is closed. Availing time is closed. That's all. Right. And if anything else to be discussed on that, you can mail me. Then we will have a discussion further on that also. Don't worry. It's only since the time is moving fast, I am just concluding. And as a last word, I take in the very beginning itself, I have said that this is a privilege for me. You have considered a person from this background amongst the stalwarts of all India-based faculties. I am thoroughly privileged, and I am honored by including me in that in this faculty list for your presentation. And this is the second time I am coming and interacting with you. I'm very happy to find that all my colleagues were there, and some sort of a discussion could take place. And for giving me an opportunity, I thank the Kannur branch for the wholehearted support. Thank you very much. Thank you.
Thank you, sir. Thank you. And you proved that you are because
right, sir.
Tax related act rules and issues. So really thank you, sir. 2 minutes we can wait. If anything is to be interacted. Okay. I feel that almost all the queries you have clarified. Now I request the Fahad, Chartered Accountant Fahad, to propose the vote of thanks. Fahad, please unmute. Fahad, please unmute. Okay, Fahad, please.
Sir, audible?
Yeah, Fahad.
Respected Chairman of Kannur Branch of SIRC of ICAI, CA Jayaprakash sir, and respected faculty, CA Soman sir, and all my colleagues who have participated in this seminar.
First of all, yet another seminar has been completed. I would like to say that it was a wonderful experience. Thank you very much, sir, for this wonderful seminar. I hope this seminar will help us to for our GST audits and representations. Also, I would like to thank our chairman, Jayapage sir, for conducting wonderful seminars frequently with lot of good faculties. Thank you very much, sir, for your help. And also all participants who have participated here, thank you very much for your support, everything. Thank you very much.
Thank you. So thank you. After Corona, we will have a physical meeting at Kannur. Okay. So
Okay.
wait for that, sir. Thank you very much. Thank you. Thank you.
Thank you.
Thank you. Thank you.
Good night, sir. Good night. Good night.
Good night.
Stay safe. Thank you.